Hi, I'm Julia Cordova, and I am coming at you live from my office. I was just playing with green screen backgrounds, and I thought I would pretend to be a furu or something, but yeah, I'm just in my office right now. Anyway, thank you so much for subscribing to my channel. I really appreciate it. And today I wanted to talk to a trader who trades the VIX for a living or to make money. And his name is Michael Listman, and he is known as at UVXY Trader on Twitter. And so thank you very much for joining me, Michael.
Hi, thanks for having me.
Before we start, can you just tell me a little bit about like what is the VIX?
Sure. The VIX is a measure of volatility in the market. It's created by calculating the option premium on SPX options. So the higher that premium is, the larger the VIX is going to be, and conversely, the lower those option premiums are, the smaller the VIX is going to be.
Okay. And so when I first started trading, which was a long time ago, like 6 or 7 years ago, I remember people telling me that if the market starts to go up too fast, I mean, I knew the VIX would rise if the market goes down, but I also remember hearing that if it goes up too fast, the VIX will rise. But you know what? That hasn't happened. Is that true?
Not usually. I guess if it went up too fast and people were worried that there'd be a pullback, that it could spike or rise, the VIX could rise in that environment. But typically, if the market's rallying, people don't see a risk in it dropping, so the VIX doesn't get elevated in those situations.
So is there a way? I know some people on Twitter were saying, well, you know, the VIX isn't dropping when it's going up, and is that something that you watch to see whether or not the market's about to turn? Does that work?
Some people claim that there's forecasting abilities in looking at levels, but it's nothing that's been proven to me, so
Got you.
I don't subscribe to that.
Got you. And how long have you been doing this?
Volatility or trading?
Yes.
I've been trading since before TWA went bankrupt, if that gives you any clue.
Oh my God, you don't look that old, but okay.
That's an airline. So that would be like late 80s, early 90s.
Oh my gosh, yeah. Wow, good for you.
Trading and started with options back when retail investors weren't allowed to sell options. You could only buy them. OEX options, which is I mean, they still trade OEX options, but it's very light. It's not like all the SPX or SPY options these days, but that's what we had back then. That's what we trade.
Okay. And so what made you focus on VIX trading? Why?
I was operating some Radio Shacks, as I own some stores, and I knew that they were going down. So I was like, I'll get back in the market. Yeah. This is a great short. I'm gonna watch these guys go bankrupt.
Wait. You owned these stores and you were gonna go short them?
Yes. Well, short.
You know what?
Short corporate.
I follow the best people. I really do. I have talent because I don't know why you're following me, but like I really like you. I knew to follow you right away because you are so clear. You have seemingly an infinite amount of patience to answer questions. And now I find out you're freaking genius because that's really good. And you're basically hedging your own career. I love it.
Yeah, more or less. I mean, they were already in trouble, but I knew the writing was on the wall. They were going down. There was no coming back. So
okay.
I put it all on black and said, yeah, they're going bankrupt, and
smart.
Of course that worked.
Smart. So I should probably just tell people, because I meant to do this at the beginning. I am not a professional interviewer, you guys. I'm just asking him the questions that I want to know, and hopefully they're useful to you. So I hope I'm not unprofessional. Well, depending on the way I am. No. I'm just asking him questions. Okay. So wow, so by by shorting your own stock, basically, that got you into the VIX stuff?
Well, that was only one trade. So I'm like, okay, what do I do for an encore? So I was, I'm very familiar with futures and options and all those things because I had done them for years and years. And I went on, SIBO has a bunch of tools and screeners and scanners, and I found one that showed options premiums that you could collect, and it would tell you, okay, if you just repeated this trade throughout the year, how much you'd make, and would list individual option contracts, and UVXY was showing up, 30 times on this list, among others. There were things like GameStop, and I forget what other ones were hot at that time, but I was looking at that, and I was like, oh, that's a lot of money looking at that, 300% per year or whatever it was.
Yeah.
So I thought, okay, I'm just going to sell covered calls and collect the premium, and I got burned. And
Really?
It's been a years-long process learning how UVXY actually works.
Okay, so can we talk about then what are the different, maybe we can look at your screen and talk about what are the different VIX vehicles to trade and sort of what the differences are between them? I look like I have web
Yes.
whenever okay. All right. Okay.
So here's a list. There's a couple dozen, if we're just talking ETF, ETNs, there's a couple dozen of those that are volatility. If you look over here at this one-day change column, you'll see VXX went up 6%.
Mm-hmm.
TVIX is a 2X ETN, so of course that went up twice VXX.
Okay.
UVXY is 1.5, so that only went up 9.5%. And so you can see VIXY here is that's probably going to be another 1X. You get the SVXY, which is an inverse, that went down basically half of what VXX went up, so that's a minus 0.5 leverage.
Okay. Interesting. And
in addition to that, you could trade the futures directly.
Right.
/VX.
Okay. And
you could also trade VIX options or SPX options.
Okay, because that's all the same, really, right? I mean,
yeah. Well, they all have their little idiosyncrasies, and you need to know how the markets react and how they're traded. If you're trading UVXY, you've got, or any of the options, you've got Greeks to deal with, whereas you're not going to have that with futures contracts.
Okay.
You need to know the product that you're trading.
Got you. All right. And so XIV used to be a thing, right?
Yes. It was just like SVXY. It was an inverse. It was a 1X inverse. The problem is that if something spikes 100%, the inverse of that is down 100%, and that's kind of what happened on the Volpocalypse.
Yeah.
There was nothing left. There's some little management things in there to try to prevent it from going below zero, but obviously that didn't work for XIV. So.
You know what I felt so bad about was that happened after hours, if I remember correctly. Like, it was like acting like it was going to be not okay, but it was acting like it was not going to zero until after hours. And then I think it was
right.
hours that. So why did they do that, Michael? Why would they have wanted to
it was
retail people like that?
it was a liquidity crunch.
Right.
Because at the end of every trading day, these leveraged funds have to rebalance their futures holdings. And they had gotten to a size, and the market had been restricted to the point where, and this is a very simple explanation, it had just gotten to a point where there wasn't enough liquidity for these pro shares and Barclays or Dirextron to move all the contracts that they needed to re-leverage for the next day. So basically a short squeeze, or everybody get out, and the price just shot up to the roof, and that killed these contracts.
That's so interesting. So really, if there is another, what did you call it, VIX apocalypse? That I mean, would that?
Yeah, Volmageddon, VIXapocalypse. There's a bunch of different names for it.
Yeah. So would that happen after hour? I mean, I guess, is it more likely to happen after hours than it is during trading day?
Well, if that particular scenario was repeated, then yes, it would happen at the rebalance point.
Right. I just felt so badly.
But there's nothing stopping it from happening in the middle of the day.
Yeah. Yeah. I felt so badly for some of my colleagues that were in that, because they just got squished. That was terrible. That was terrible.
Oh yeah, no, lots of people got wiped out.
Yeah, and lots of people had, at least 10% of their portfolio. I mean, why wouldn't you, right? Because as you often point out, UVXY just goes down, but XIV just went up. Like, it just went up, and I don't understand, why didn't SVXY implode, whatever happened?
Well, no, that was the one that dropped to zero. At that point, it was. SVXY dropped to, pretty much close to zero. Close. I think it went down to 6 or something.
It didn't implode though. When XIV imploded, and XIV was less leveraged than SVXY, right? I mean, I'm asking. I don't know. I think so.
No, I think they were both -1x at that point. Since then, they've dialed SVXY back to a half x.
Okay. That's so interesting.
To prevent this in the future.
All right. Interesting. Yeah. Interesting. Okay. So now who are the other VIX traders that you follow?
I don't know that I follow anybody else, but there's definitely some others out there that have some very good information. Vance Harwood has great information. He's got a site. Where is he? I thought I had him. I don't have him up here.
That's okay. I like.
He's got a lot of educational material up there.
Okay.
Actually, I can put it in there.
I was hoping we were going to see something embarrassing live, but it didn't happen. Because that'd be awesome. Okay.
But he's got a lot of information. He can be very technical. So if you're scared by math, then it might not be the site for you. But
well, that's why I like you, because I understand you.
All his information is really good.
Okay, I like you because I understand you.
Seth Golden's another one. He's been nose down and shorting volatility for quite some time now, so he's very successful. He's got a solid approach.
Okay.
He's another good one to follow.
Okay, so tell me then, what is your approach? What do you do?
It really depends on the market conditions. What account I'm trading out of. I've got different styles for an IRA account as opposed to just my regular trading account.
Okay, well, let's just talk about your regular trading account. Like, what do you do? What is your strategy?
Currently I'm just selling naked calls every week, collecting the premium. If it doesn't finish out of the money, I'm just rolling it to the next week. If it starts to spike too much, like right now, it looks like it's going to keep spiking.
Yeah.
I get flat, which means I basically buy enough shares to cover all of my short calls. So right now I'm completely flat, and I'm based on what the market's doing right now. And if you can see this, it looks like the Dow's pegged to open down 0.5% Monday morning if this holds.
Yeah, right.
So, yeah.
I mean, I hope so, because I'm short. So, okay. And then are you kind of on like a weekly thing? Like, do you do weekly calls, or like how do you
It depends, but yeah, the calls will be a weekly sell because that's when you're going to get the greatest theta decay, the most bang for your buck. It's the riskiest. You've got to pay attention to it all the time. You can't let a spike get away from you. But it's the return on investment is going to be much greater than if you were to sell just the monthlies or every other week or 6 months out.
Okay. And then, so do you like every week, do you get out of whatever position you're in and like just collect your money and then reinvest the next week? Is that what happens?
Usually, I mean, if it finishes in the money, or yeah, say like last Friday it finished in the money because UVXY was up to we finished at 12:30, or I think that's about where it finished last Friday before it creeped up after hours. But 12:30 is where it's finished. I have some 11s and some 1050 calls that I'm short, so I just rolled them out and collected more premium.
Okay.
And then I had gotten flat earlier in the day. I believe I got flat. I got completely flat at 12:30, but I had started layering in, I believe 1175 is when I started layering in. So like I said, I'm completely flat now, so it really doesn't matter what UVXY does unless it goes down below my strikes and I start to hemorrhage cash.
So so do you make money? Like, I mean, are you profitable?
Oh yeah.
Yeah.
Well, like I said, every time I roll,
Right.
I'm collecting more premium.
Right.
So
Yeah. So, but
I think my last roll was 36 cents. So I collected that for another week. I think this is my second roll on these contracts. So I've already collected 70 cents plus whatever I originally sold them for, probably another 50 cents. So I probably got 100 or $1.25, somewhere between $1.25 and $1.50 of I guess basis cost reduction in these contracts already.
Okay. And do you compound your account then, or do you, because it is kind of risky, do you just do the same amount every time?
No, I would be compounding. It's basically on a percentage, but I've also, you've got to have some market awareness. I might only sell a few contracts one week if I think, this isn't the week to take a bigger bite.
And so
So I don't have a mechanical formula for that.
how do you know?
There's no indicator. It's just market awareness. I mean, after you've been watching it for a while, you just get a feel for, the market just doesn't feel right to me right now, so I'm not going to go in as deep.
Okay, that's fair.
Every trader has to develop a bias.
Yeah.
From some source. It might be a chart. It might be fundamentals. Might be, I don't know how many times your cat spins around on your lap before he lays down.
Your cat is so cute. So he's the avatar. That's how I know that. I've never been to your house. I'm just saying. It might not be cute in person. I don't know.
I don't know.
What'd you say?
Said maybe. I don't know.
Yeah, he's cute. I'm sure he is. Okay. So, at one point I remember you had talked about, oh, here's an example of UVXY spiking, and then it went back down, and you're like, this is typical of when it's going to stop growing. Can you show some examples of that so that we can, like, there's a bug in my house, but anyway, sorry. I would like to be able to look at the chart, and I mean, I feel like I'm pretty intuitive already, but I think you've got it down to a science a little bit. So just, can you show some examples of how you might know that it's topping out so that there's a bug, so that I could tell when to get out of it if I'm in it, because I often do trade it, but I don't do the options and stuff. That's probably why I'm not asking you the best questions. But I trade the common stock of it, or the ETF.
Well, we'll look at the last spike because that was kind of textbook. What I've noticed, and I studied the August 15 spike, which was a China currency scare. I studied that one intensely because that was the largest spike ever in UVXY since inception. So I wanted to know, okay, how long did it take to recover it? Were there any signs leading up to it? Everything that I could pull out of that, everything I could learn, I tried to pull out of that. And one of the things I noticed, and I've noticed in every larger spike since, is that there's I'll call it a flush out spike, where there'll be this last run up of volatility, and then it just gets exhausted and just crashes back down very hard. And that happened. You can't really see it on the 1 hour chart, but
I can see the
last
spike, though. I can see the volume was the highest at the spike. Go back.
Yeah.
Yeah. So that when I'm looking at little charts, that's my giveaway, is when I see something is at an extreme, whether it's high or low. If I see high volume at an extreme, my butt is going to do the exact opposite of what's happening there. And then it's an easy stop out, because if it gets higher than that spike, you're like, what? Then it was a breakout. People are buying it for a breakout. Because sometimes after a large volume spike, it goes down a little bit and then back up. So that's how I do it. But yeah, that's
right.
That's what I noticed looking at it. Okay.
And I don't know if this translates to other underlyings, but for volatility, this seems to be a tell for me, and it worked out like a champ.
Yeah.
With this last one on January 31st. You can see where we're going now. I tweeted about it Friday that it kind of looks like it, but the problem is that after hours it rebounded, and it wasn't quite as high as I would have liked to have seen it. The peak didn't get up quite as high enough.
Okay.
So that's kind of told me we're probably not over. And then when you look at the weekend Wall Street, what's happening so far, and we'll know here in what, 2 more hours or an hour and a half.
Yep.
When the futures start opening, how this is going to play. So
wow.
I wouldn't be surprised to see UVXY start trading at 13 here when it opens.
And I wanted to
tomorrow.
I wanted to tell everybody who's listening to this that you have a spreadsheet that you've made that it sort of tells you what the UVXY price is in after hours. Is that right? I
do. And there it is.
You know what though? I'm like helping you out here, man. You didn't even send it to me. Dude. I don't know. That's rude. No, but okay. Can you show the spreadsheet a little bit and like explain what people like, why it's useful?
Sure. So there's another ticker, UVXY.IV, and that's the indicated value, and that's you can pull it up on Thinkorswim. A lot of places will publish that, but it doesn't get updated outside of the normal trading hours, 9 to 4:15. So if you want to know what the indicated value is, you've got to figure that out yourself. At the end of the day, ProShares publishes their, and I'll show you where I get all these figures. ProShares publishes the NAV. So right here, their net asset value, closed day Friday, was $12.19.
Okay.
And that's different from the market closing, because market price closes at 4 p.m., but the NAV isn't printed until 4:15. So there can be a change that affects the percent change the next day. Usually there's not a huge difference, but there's a decent difference now. So I take that figure and plug it in. See if I can switch. So that gets plugged in there to the NAV. The M1, M2 share, that's how many shares of each they have, and under the daily holdings page, they'll list how many millions of shares each contract has. So here's M1 for March, M2 is for April.
Okay.
So I'd put in 35.8, 6.3.
Okay, but no offense, but like, why do we even
6.3.
care? Why do we care what it is after hours? Like, what advantage? How are we going to trade it after? I mean, why do we care?
Well, you can trade it. Well, once it starts trading, I guess East Coast time, that would be 4 in the morning.
Yeah.
Once it starts trading, then you can trade it directly. But if it's really moving and you need to protect yourself, you still have VX futures you can use. If you need to calculate the damage that you're taking,
Okay.
This can help you.
Got you. So if you're in I happen to be long volatility the night of the last presidential election, and yeah, I had to skedaddle out of that in the morning quick. So this could have helped me then for sure. I see. Okay.
Right.
Okay. Interesting. Very interesting. Okay. So, you mentioned that you are conservative VIX trader. What does that mean compared to other VIX traders?
Well, I don't know how many risky VIX traders are out there, but like I've got plenty of room, margin room to take care of spikes. I'm ready to get flat the moment it spikes. I start to hit 15% spike, and then I'll start to layer and get flat. And usually by 25%, I'm completely flat.
Okay.
At that point, I'm delta neutral. It can spike 100% at that point. It doesn't hurt me.
Is this automated, or do you stare at screens all day?
No, this is.
Okay. We're staring at the same screens. Okay. All right. Just asking.
Yeah.
Yeah. I have like a little alert.
Or staring at my phone.
Oh yeah. I mean, been in Walmart. Got to fix that. Yeah. Okay.
Yep.
Okay. So, what now? Be like a politician, and like, even if I ask, I'm not asking you the right questions. Maybe I don't know, but like, what do you want to talk about? What do you think that people can learn from you? Why would people want to follow you?
I don't know that I'm in this for the questions, because and you talked about me being patient and answering questions. It's actually the questions that challenge me. People, I'll post a trade or I'll post some little snippet of information, and people ask questions or challenge me or present me with a trade idea. Hey, will this work? Will that work? And what it does is it forces me to look at it in a way that I might have not looked at it before. Okay, maybe that will work, and I'll work on the math with them and figure it out. So answering these questions, I think, helps me maybe more than it helps them. Got you.
But it sounds like your strategies actually change over time depending on market conditions. So it sounds like you probably have a variety of different strategies that you employ depending on a little bit of the art form involved of you watching the market for so long and knowing when things are going to happen. So people sort of follow you to figure out, what strategy, because you're pretty open and direct about what you're doing. You're not some people, they're so annoying. They say what they did after the fact,
Mm-hmm.
Like, how is that helping me? Like, that only helps me in hindsight. Right. I don't even know if you're telling me the truth. You know what I mean? Like, I don't know. It doesn't help me, but I feel like you are more like real time. You'll say what's happening. You'll say if you think something is a top or whatever. I appreciate that. So thank you.
Yeah, no, I share the trades, or at least the trades I think are relevant to others, because if I put on a trade that's like managing another position that I already have on,
Yeah.
you know, that's not going to be relevant to anybody else. You know, if it's spiking and I'm selling puts to cover something, or I need to buy some calls to protect maybe my portfolio margin metrics, that's not relevant to somebody else, and I'll just be like, well, why are you buying those 5-cent calls? You know, you think it's going to spike up to there? No, I don't. I just it's a margin thing.
I got you. I'm kind of obsessed with watching UVXY. It's so interesting to me. And you know, I also noticed in your tweets sometimes you say, I'm not expecting a big spike until summer or something like that. So tell me what the patterns are, because that is so weird to me. I mean, I get what you're doing, but I'm like, how does he know? It seemed like you did some sort of statistics to figure out like what the average spike is up, and then when the big spikes are, how often those are. So can you talk about that? Because I think that's really interesting.
Yeah, well, again, in analyzing that August 15 spike, I was like, okay, well, how often do these large spikes happen? And I took all of the historical data and measured all the spikes. You know, this is the thing that I put together myself, so I had to pick the metrics and decide, okay, what constitutes a spike. So what I did was say, okay, if it reaches a new all-time low, that kind of clears the deck for a new spike, and then anything from there, rising from that all-time low, I count as a spike. Okay, and how high does that go? How often does that happen? So basically what I found was, and this study's getting a little old at this point, but a 10% spike happens basically once a month.
Okay.
25% or greater spike happens every other month or 6 times a year. 50% spike happens twice a year, and 100% spike happens every 18 months.
Ooh, I want to write this down.
So when I said I'm not expecting one, when I'm expecting one till the next summer, that's because our last 100% spike was December of 18.
I see, but you're just kind of like, you're just playing a numbers game there. You're not like, there's no.
Yeah.
Yeah. Okay, that's good. I like that. I like that a lot. That's interesting. So when is the next spike gonna happen?
I mean, oh yeah.
Tell me.
I can't tell you. That's a secret.
Oh my gosh. Well, I know it already, but I'm trying to get you to validate my own brain. Yeah.
You know, my opinion is that volatility is purely an event-driven occurrence, and I don't think it's predictable. I mean, you can look at all the threats out there, but if the market sees the threats, they're surprised.
Do you ever think that there's going to be a trend change in UVXY?
Oh, what change?
Trends change. Like it just goes down. That's like your whole mantra, right? It just goes down. When, like, I mean,
right.
You know, I mean, there's other ETFs like JNUG, for example, that just went down until it didn't. So is there going to be a trend change in UVXY ever? Will it just, one day, will it start, instead of just going down and spiking occasionally, one day, will it start going up and spiking, or up and dropping? Is it going to change?
No, because of what it tracks. So it tracks the VIX, which, you know, they call it mean reversion, but
right. But what if things get bad?
It's VIX can't stay elevated for long times, because that gives you another opportunity to sell volatility that isn't there. Volatility has to be realized for VIX to stay elevated for long periods of time, and the market will exhaust itself, calm down, these numbers will contract, and these ETFs will perform just like they always have. It's basically designed. It's in their DNA to go down,
okay.
Interrupted by various violent spikes to the upside.
Wait, so now I need to ask this because this is aggravating to me as somebody. Okay, but let's say we get a correction, and let's say the correction isn't a sudden drop. Maybe the correction is a grind down. Does it not, would it not then start going up?
Well, we had that, we basically had that in the fall of 2018. From September on,
Yeah.
it was just kind of a slow sell-off in SPX until a crescendo in December.
Okay.
And you could see basically what UVXY did. I don't remember the exact chart pattern, but
I mean, that's okay. I mean, I don't know. I like the underdog. I like thinking about it going up. But maybe I'm just a dreamer. Maybe I'm starting
to. So here it is. Here it is from September to December, and yeah, it just went up because the market just kind of grind down.
So it more than doubled. It looks like it went from 35 to 95.
Yep.
Yeah, that's good. That's good for bear types. Okay. That's so interesting.
So it's now at 10.
And you made money.
Or 12.
You made money even when it was going up, right? Like you're not just, you don't always just sell calls, right? You made money.
Oh no, I don't.
Yeah.
Yes.
Yeah.
Well, I'm not going to say I didn't take some hits in here.
I mean.
But.
Yeah. Okay. I mean, you're saying you're human? What? But you made money over the years.
Oh yeah, no.
Yeah. Okay. Good.
But ultimately it goes down. You know, yeah, it visited 90 here for a little bit, but we're at 12 now.
Yeah. So sad. Okay. Is there anything that I did? Oh, there were some questions that we had on Twitter. Let me go and look here. Okay. Aunt Moitya, this is a silly question, but so you get annoyed by typing the symbol starting with the $sign. I forget all the time too, AM. It's annoying. And you know what's extra annoying is I'd like to be able to click on the $sign with the stock symbol and then be able to get the stock quote, you know, kind of like stock twits a little bit, but like higher end and not so twittery. And then somebody's asking,
right.
You know, how high will it fly? And you basically said that you don't predict price, right? You just work off of the margin.
No.
Okay.
If I could predict price, I would probably play it completely differently. But I play the eventual and unavoidable decay, and that's my trade anyway.
Got you. Okay, I'm going to ask another question that. Okay, I'm just making sure I got all these questions here. I do trade sometimes the VIX on the long side, but never on the short, because the VXX is an ETN and I don't trust ETNs. I don't feel comfortable sitting in those long-term short the volatility trades. What kind of options compose the VXX and UVXY? Now, you answered already, but do you want to just take a stab at this?
Well, it sounds like that's the difference between a ETF and an ETN. ETF is largely securities backed, you know, kind of like a gold contract or gold backed dollars that it had. There was something behind it, whereas an ETN is just a note. It's kind of, I guess, like an IOU. So there's a risk to those.
Okay.
In fact, for portfolio margin accounts, and I know this for TD Ameritrade, I don't know if other brokers do the same thing, but they will not extend you portfolio margin leverage to an ETN. So that would be like VXX or TVIX. You have to pay regular or carry regular Reg T margin with those, as opposed to UVXY, which is an ETF. You get full portfolio margin treatment with those.
Okay. And then he wrote short VXX versus long UVXY versus selling out of the money calls and put on indexes. Okay, I think we talked about that a little bit already.
Okay.
What are the real returns of shorting the VIX if you consider that you have to provide capital to support negative balance when the market goes against you? Some real life calculations and examples.
Again, that would be highly dependent on what your strategy you were deploying was. Every trader is going to approach a trade differently. Even if I give you the exact same entry, you're going to manage it differently. You're going to get scared sooner, or you're going to stay in too long. No two people are going to trade the same, so that's kind of hard to answer. Basically, everybody's got to find their lane, what they're comfortable with, what they can execute, and keep doing what works.
Well, the nice thing I like about your account is because I am an options neophyte, but I understand mostly what you say, and I feel like if I were to ask you a question, you would answer me, and in a not annoying and condescending way. You would just answer me, and that's really nice. It's really nice. I appreciate it. And then I have a couple people asking me for glitterati swag, y'all, and decoder rings. You guys are so cute. Okay. And someone asked you, when will dust reverse split? Do you know that? No.
I don't run that, but
okay.
I would say I would go to split history and then dust, and I would look at when it is split in the past.
Okay.
And that would kind of give you a
not really
indication of when it might.
I would do the revert. Well, yeah, maybe. I think it does do that. It probably splits it used to split and now it reverse splits. So I don't know about that. I think you'd have to, yeah, we have to figure it out. Okay, cool.
So that's going to be up to the issuer right there when they do it. I get a lot of questions about when UVXY is going to reverse split, and when ProShares does it, it's generally when it gets below $10 for sure, but before it gets to $5. I know it's gotten below $5 in the past once or twice, but generally in that range is when it's going to reverse split. They also announce it with a bunch of others, so it's rare that they'll just do one of their ETFs as a reverse split. They'll usually announce, hey, here's a dozen that are getting adjusted, either splits or reverse splits.
Is it a strategy to, because I know that some people were doing this for Nugget and Dust a while ago, and some trading advice they would short both of them at the same time to try and collect.
Yep.
Yeah. Is that possible with UVXY? Could we do something similar? Is there can we do that with SVXY and UVXY? Or what two things would we choose if we wanted to do that?
I've looked for that because I've also done the Dust Nugget trade.
Yeah.
Just that exact thing where I'm shorting them both.
Yep.
It's not a fast decay, but as long as one of them doesn't get away from you, okay. The sum of their contract prices just keeps dropping.
Yeah. So you're I mean, it's a surefire way to make money, I think. Just like not awesome money, but money. Money is good. I like money. Okay.
But I haven't found that same delta neutral trade for volatility that really works as a premium collection or decay collection vehicle.
Okay. That's a shame, because that would have been a nice little something to have in one of your accounts. Okay. Is there anything else that you want to talk about?
No, I think we hit everything, and basically just wanted to answer your questions, that you had, and
Thank you.
mhm, and fill it along those lines. Go over the things that I look at, that I use to calculate things. Here's one other thing that I'll bring up, because I haven't seen it as much before. People talking about contango and beta slippage.
Yeah, let's talk
Here's
about that stuff.
here's UVXY versus its actual benchmark, which is SPVXSP. And the difference in these charts, this is a 1-year chart, that's the beta slippage there. If UVXY was 1x, it would be the exact same, or close to the exact same decay, the 53% as opposed to 71%.
So it looks like when it's like twitchy, like it was in the middle, there's less of a difference between the two. When it's less twitchy and more trendy, there's a bigger difference. Is that right?
Well,
Am I even making sense? I hope I'm
UVXY, well, no, UVXY can actually gain, where it typically decays, it can actually gain against the benchmark. It's a function of compounding and, days of up days and percentages of up days. It goes into detail in the prospectus about how that can happen. But in general, the way things play out, it just keeps decaying. So even though, yeah, it gets tighter here, that's short-lived.
Yeah, it is cool to see the volume spikes when it's about to trend change. That is pretty cool. Okay.
Right. Well, because everybody's piling in protection, like, oh crap.
No, I mean,
I need to protect my portfolio.
no, I mean, but even at the peaks, like you can see like this, the spike that just happened, it looks like in January, you can see the volume peaked and there. Yeah, see?
Right.
Yeah.
Right.
And then it goes down. So it's almost like they know and they're selling it there. Interesting. Very interesting. I'm going to do some work on my own UVXY chart and see what happens. Okay, cool.
Okay.
All right. Well, thank you so much, Michael. I really appreciate your time. I hope that so you told me, I didn't talk about this at the beginning, but you told me you're about to go on a cruise.
Yes. gotta spend this money sometime.
But okay. You just seemed like a very responsible person, and we're talking about risk management. But okay. I like
Well,
it.
I was looking into what are my Wi-Fi options, and if I should bring a Microsoft Surface with me and trade some futures while I'm floating around or something. I'm still thinking about that, or if I should just generally take the risk off for that week.
Well, I mean, it's.
What would you do?
It depends on who I was going on the cruise with. Oh. Yeah, but that's true. So, you know what? Because internet, well, they have satellite internet on the cruises. I've done that before. I'm a little addicted. I'm not gonna lie. Yeah. So I don't know. It depends on. I might try to unplug actually, unless I was really sure something awesome, or unless I thought the probability of something awesome happening that week was super high. I might try to unplug. But I don't want you to, because what if I have a question? Where did my resource go? No, I'm looking forward to hearing about your trip after you come back. That'll be fun.
All right, no problem.
All right. Well, thank you so much, Michael. I appreciate your time. And again, if you guys want to follow him, he is he's at sign. If you don't hear a dog barking, it's not a Cordova video. So there's that. His handle is @UVXY Trader, TRADER on Twitter. I am @CORDOVA Trades, Trades on Twitter as well. Thank you for joining us, everybody, and I hope you subscribe, and I hope you found this valuable. Thank you.